What's up, guys? As you all know, my name is Prosper, but my friends normally call me Promas. So you are free to call me so. So in today's video, I'm gonna be documenting the most important part of trading on this video, which is the foundation of the foundation of the market. So in this video, I will be documenting every single details about this foundation. So in further ado, let's dive into this video and see what we have today. So today we have market structure, guys. Market structure, you can see it here. So this is the most important part as a trader or as a beginner trader. If you want to be very professionalistic in this trading industry, you must master market structure. It's very important. So in market structure, we have three types of market structure, guys. We have the uptrend, the downtrend, and the consolidation part in this game. So all right, what is market structure? Market structure is basically known as the DNA of the market, the footprint of the market. That's market structure. It's also defined as the way price tends to form high or low in the long term. So we have three types of market structure. We have the uptrend and the downtrend. So if you have never spotted this pattern before, you see this on the screen here. You see higher high, higher low, higher high, higher low, higher high, higher low. Whenever you see this pattern, just know that it's an uptrend. You map it out. It's an uptrend. Let me do a little bit zoom in. You see higher high, higher low, higher high, higher low. Whenever you see this kind of structure in the market, you know that the market is in an uptrend. No need of misunderstanding it. It's an uptrend. That you can see a break of structure. You start to mark out your break of structures. That is the way that you identify which phase the market is in now. So further ado, let's check out the downtrend. The downtrend is also the opposite part. Wow, it's also the opposite part. You can see it here. Let me show you guys. See, you can see lower low, lower high, lower low, lower low, lower high, lower low. That's just it, guys. The upside is known as the lower high. In a downtrend, the downside is known as the lower low. So that's just it. We have the consolidation. Here is where so many traders tend to make mistake. Whenever they see price just going up, they enter for a buy. Whenever they see price just going down, they enter for a sell. They will not even understand which phase the market is in. It's very important, guys, you understand which phase the market is in now, so you can always identify the pattern and what is going to happen next in the market. That's just it. No need of just seeing so many traders love to press the buy and sell buttons, and that costs them a lot of money. So to become a professional trader or as a beginner trader, you must master this market structure. This is the foundation of the market. It's the DNA of the market. So we have explained the two types of market structure. We have the uptrend, that's the bullish part of the market. Now we have the bearish part of the market, that's the downtrend, which is the bearish part of the market, the downtrend. So what I am actually seeing here, guys, you see that we have not explained the third part of it. The third part is the consolidation, the most important one. This is where the big banks, the higher institutions tends to entice you or induce you as a retail trader to enter for a buy or sell so that they can eat your money. So it's very important to understand this. Whenever you see this kind of pattern, consolidation in the market, it tends to mark out your resistance and your what should I call it, your resistance and your support level. Then you wait for price to come back, you come down here, you enter for a buy. You wait for price to go up, you enter for a sell. That's just, I call it gambling. Trading It's technically not a gambling. If you understand trading, you know that trading is not a gamble. If you can enter the market and exit the market carefully as a professional trader, you will make a lot of money from this game. It's very important, guys. So whenever you see this pattern on the market, you will see that price tends to form equal highs and equal lows. This is actually, if you check my last video, I explained the base currency and the quote currency. Whenever you see this kind of pattern in the market, let's say actually now we are trading euro USD. Now we don't know which one is higher or which one is lower. These two currency pairs, with the quote currency and the base currency, the euro and the USD are competing together. Yeah, this is Bitcoin chart now. This is Bitcoin chart. You can see, let's say this is BTC USD. You don't know which one is competing with each other, because for a trend, or for a market to go high, for us to enter for a buy now, actually now I'm entering for a buy on BTC USD. I'm actually selling USD to buy BTC. That's just Forex. Forex is a fragile exchange, as I explained in my last video. It's a fragile exchange where global market exchange currency pairs. So if you think that you are not participating in this game, whenever you get to a bouquet or something to a country, and let's say you get to UK, you have US dollar in your bank account, you need to convert that to US dollar to pounds in order to use it in the UK. That's just it. That's when you are participating in the forex market. When you exchange one currency to another, you are actually participating in the forex industry. So that's the same thing I'm trying to explain here. Either USD or Bitcoin USD is just ranging just like this. You don't know which one is in control. You don't know if the buyers is in control or if the sellers is in control. That's when so the smart money we kept on setting their traps. This I call these traps, because there are so many surplus above this highs. There are so many surplus below these lows. Whenever price tends to take out this high, you see a massive move to the downside. It's coming straight down. There's so many traders will enter for a buy, you see their surplus here, price are taking them out, using their money as a fuel to push price back down to sweep the liquidity. Don't worry, I'll be explaining liquidity in my next video. So to sweep back down the liquidity below this low, then move in the normal direction. So whenever I see this pattern on the market, I exit that currency pair. I move on to the next currency pair, because I know this is a trap. I'll be extremely waiting for the market to show me my entry plan, my trading plan. So this is not part of my trading plan, or this is not a good market condition to trade. Whenever you see this I rather trade this and this than to trade this. Consolidation is very dangerous. Is very, very dangerous. So be careful, guys. So we have explained the first part, second part, and the third part. The first part is uptrend, the bullish part of the market, the down trend, the bearish part of the market, and the consolidation part. So let's move on to how can we know when. Now the next question we should ask ourselves is that how can we know when the buyers or sellers are in control of the market? It's very important. It's very important you know when this pattern occurred in the market. You know that the buyers has taken over, or when this pattern occurs in the market, you know that the sellers has taken over. It's very important to know this, guys. Okay, let me show you guys. I have a little this is the theory. I'm just explaining the theory on this video. If after this theory, I'll be directing you guys to the real market live condition. So let's move on. Let me show you guys how to spot the pattern. If you want to know who is in control of the market, is it the buyers or the sellers, that's when you normally see the opportunity to take the advantage of it. So now let me show you guys something. So let me delete this. Okay, this is gonna be extremely tough. Alright guys, see this pattern. This is very important. You can see this pattern here. See, price goes up here, boom, comes down, higher high, higher low, break of structure below this low. You can see break of structure, higher high, higher low, higher high, higher low, higher high. Then price comes back. Instead of price to respect this flow here and continue the bullish part of the market, that's creating higher high and higher low dynamic. So the price tends to come down and swept or take out the previous higher low. Very important. Whenever you see this market, whenever you see this in a higher time frame, you know that the markets have shifted bearish. I see what price, after price creating this market shift here, it came down, now started creating lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then again, let me delete this, let me clear all these shits. So again, the same pattern occurs here. Let me delete all this. It's taking much of my time. Oh my god. I'm just being careful so I will not delete the lines, because it took me a lot of time to draw that line. So we are back again. So let's see, the market shift happened here. That's when we know that the sellers has taken over the market. The sellers tends to push price back down. I do this as a market shift. Let me show you market shift. So the sellers push price back down, showing that you can see it here. A market shift occurred here. Then price started creating higher high, higher low. I mean lower high, lower low, lower high, lower low, lower high, lower low, and then you can see the same thing just keep on occurring in the market. The same thing just keep on happening in the market. You can see here now. Let me show you guys something. Price, after price creating the last higher low, comes back lower high. Lower high comes back here, creating a lower low, pulls back instead of to continue this as a, see what it comes down, a lower low, instead of to continue the lower high, to continue creating the same thing over and over again, but price tends to pull back here. Let me show you guys something. Price tends to pull back here, not even respecting this. It not even respected this last lower high. It just boom, break of structure. I do it as a market shift because the markets have shifted from bearish to bullish. It now started creating a higher low and a higher high. That's just it. It's very simple if you understand this game. It's very simple, no misconception on this. So right now we're gonna be diving into the real market condition. So that I can drive you guys more further how this industry, this thing called cost trading normally works. So this is Bitcoin charts. I'm gonna be using the daily time frame on this. For my beginner traders, you guys might not understand what I'm teaching here. So many of you that are started trading new, so that's why I should recommend you to subscribe to this video, share it, like, turn on the notification button, and then wait for me to drop more advanced video. I'll be dropping a video about multi time frame, liquidity, supply and demand zones, order blocks, so many of them, etc. a lot of them, because I've been in this game more than 4 years from now. I've been in this game, so I've understood how this market normally works. So the more many of you might be asking, what am I using as a strategy? My strategy is combined with a lot. It's combined with ICT, price action, name it. But in all this, I call it market techniques. Techniques of the market. I just observe that in all of these things that we call strategies are just the same thing. Only if you can grab the knowledge to combine it together, and then you eat from the market. So for that, let's get in why we are here. Let's get into business. You can see this is a Bitcoin chart. The same thing tends to occur here in a Bitcoin chart. Let me show you something. Let me delete this so I can mark it from the beginning. So guys, you can see that. Let me shift this a little bit. You can see this. Price was creating. What price was previously? Price was in an uptrend. It was creating this structure. Let me show you this structure. Higher high occurred here, higher low, higher high. I don't know what is wrong with my trading view. Higher low, higher high. The same thing. Now price comes back here, created the market shift here. Now I'll be marking all these things. So created the market shift, start creating a lower high, a lower low. I mean, a lower high, a lower low. Just the same thing. So nothing much out there. Let me mark it in a real way that you guys will understand it. So this is the daily time frame. So let's mark out from the previous part when price was bullish, so that we can understand this. So see price creating higher high, higher low, higher high, higher low. Then that's when I tend to mark out my break of structure, my break of structures. So let me shift this a little bit down. Yeah, a break of structure occurred here after price breaking the last higher high in the bullish part. This is an uptrend. That's the bullish part of the market. I mark out my break of structure here. Yeah, something just occurred here. I mark out my break of structure. Let me look for it. This is my bullish break of structure. The same thing occurred here. I see it here. I mark out my break of structure again. A break of structure occurred here again. Another. This is just you reading the market for what it is, not for what you think the market will do. Just follow the market. It's called a chat. It's like you chatting with it. If you can chat and it can interpret, like on WhatsApp, you chat with person with different languages, person can understand you. That's the same way the market is. If you can chat the market with the normal language the market normally understand, you eat from this game. That's just it. So break of structure. This is our second break of structure. See our third break of structure here. The third break of structure occurred here. Nothing much. My trading view is just hanging. I don't understand. Oh my god. It's been just today that I decided to update you guys on this game. Oh well, it won't happen again. So after all this, forming a break of structures, let me show you guys something. See, price was in a higher high, higher low, higher high, higher high here, higher low, just creating break of structure. This is the last higher low. So Whenever price, bear this in mind, whenever price takes out the last higher low, price has shifted bearish. Price shifted bearish from here. Whenever price takes out the higher low, price shifted bearish. That's the market shift, the same thing that I show you guys in the theory part. So the same thing just occurred here again. A market shift occurred here, then price started creating a lower low, a lower high, lower low, lower high, lower low. The same thing, start creating a bearish break of structure occurred here. The same bearish break of structure occurred here. My trading view is hanging. I don't understand this shit. This is pissing me off. So the bearish break of structure, yeah. What's wrong? Where is my bearish indicator? The bearish break of structure, and then start creating a lower high, lower low, lower high, lower low, lower high. It will create the next lower low again. So in this market condition, you can see how the market tends to move. Immediately price overpowered the buyers. It now started to create a lower high, taking out this previous higher low here, and then started creating the new higher the new lower high and lower low. It's just it. So nothing much, guys. So if you don't understand this, you can watch this video to understand what I explained here. So I created this channel for a purpose, to empower so many beginner traders or so many people that does not understand this game. So to impact and acknowledge some traders that are losing money, because I don't want you guys to suffer what I suffered when I started trading. I lost a lot of money while I was trading. Yeah, I lost a lot of money. So in my recommended prop firm, if you have not heard about prop firm, go to your search bar, your browser, and search prop firms. Prop firm will help you not to lose a lot of money. It's where you buy an account and just trade with, not just trading with your personal money, just is an agreement reaching out to the company or to collaborate on a percentage to share while you trade. So my recommended prop firm to you guys is Goat Fundedness. I'll be dropping the description link down below on this video, so you can click on this link and then join the buy and get an account for yourself on this video. So for further, I'll be updating you guys on the quality video like this in my next class. So please and do as well to subscribe to this channel, please. As you can see, I don't mind even if I see 2 subscribers. Subscribers, 10 subscribers extra, I believe that this encourages me more to bring more videos to this channel. So peace out, guys. Love you.